Welcome back. In this video, I want to talk about the Home Buyers Plan, or the HBP. This is one of the few ways that a Canadian can withdraw money from their RRSP completely tax-free, with the caveat being that you do have to pay it back. So what is the HBP? This is a government program that allows you to withdraw up to $60,000 tax-free for the purchase of your first home. This limit was recently increased. Before April 16th, 2024, the limit was $35,000, but since that date, it has been increased to $60,000. And that $60,000 is per individual. So if you had a spouse or common law partner, each of you could withdraw up to $60,000 from each of your respective RRSPs. So that could be up to $120,000 that you could use to purchase your first home. There are a few things that you need to do before you qualify. The first being you have to be a Canadian resident. The second is that you have to be purchasing your first home. And in Canada, your first home does not mean that it's the first house you've ever bought. It means that you have not lived in a house that you own for the last 4 years. The third rule is that if you have used the HBP before, but you are considered a first-time home buyer now, you must have paid back the HBP in full. There can't be any balance owing on your old home buyer's plan. The fourth thing that you need is a written agreement that you will be purchasing or buying a new home. And the fifth criteria is that you have to have the intent of living in that home within the next year. I should note that there is a way to take advantage of the HBP without being considered a first home buyer, and that is if you're going to use the HBP to pay for a house for a disabled family member. Now, if you do meet all that criteria, then you can go to the Government of Canada's website here, and you can just fill out this form here, T1036. It is aptly known as the Home Buyers Plan Request to Withdraw Funds from the RRSP. And you can just click on this fillable PDF, fill out all this information here, 2-page document. Once you have done that, you can submit it to your institute that you have your RRSPs with. That could be Wealthsimple, Questrade, TD, Qtrade, RBC, CIBC, whoever you have your RRSPs with. You would just submit this form to them and they will give you the money from your RRSPs. If you have multiple RRSP accounts, so let's say you have $10,000 that you want to withdraw from Wealthsimple and $30,000 from Questrade, then you just simply fill this form out twice, submit it to each of the institutes, and each of them will give you the money that you have requested. One thing to note on that is that any contributions made within the last 90 days don't actually qualify for the HBP. So if you made a, say, $10,000 contribution to your RRSPs 2 weeks ago, well, you could not request that portion of your RRSPs for the HBP. You'd have to wait 90 days to have access to that $10,000. Whatever you had in your RRSPs that's older than 90 days, you have free access to. You can withdraw up to the $60,000. So that's how you get the money out. But again, you do have to pay this money back. So let's talk about how that works. So the first thing to note is that you actually have a 2-year grace in which you do not have to make any repayments to your home buyer's plan. So let's say you withdrew some money from your RRSPs for the home buyer plan in November 2025. With the 2 years grace, that means you would not have to make any repayments until 2 years later, which would be the tax year of 2027. And the rules for the repayment of the HBP are the same as the RRSPs. You actually have 60 days in the next calendar year to make those repayments. So you wouldn't actually have to make a payment until March 1st, 2028. Once the 2-year grace is up, then you have 15 years to pay off the home buyer's plan. And the calculations for the minimum payment is really easy. The CRA basically just takes whatever you owe and divides it by how many years you have left. So let's say you took out a $30,000 home buyer plan. Then after the 2 years grace, you need to start repaying it. And $30,000 divided by 15 years would be $2,000. So your minimum payment would be $2,000. Then the following year, you still have $28,000 in repayment, and you have 14 years left, so 28,000 divided by 14 is again $2,000 for that year. Now I do keep saying that there is a 2-year grace period, when in actuality there was a temporary increase in that Until December 31st, 2025, that grace period was increased to 5 years. So you do not have to make any payments to your HBP for 5 years. That was set to be a temporary increase. As of January 1st, 2026, that grace period will go back to 2 years. That may change. Government changes things all the time, but as of the recording of this video, it is going back to the 2-year grace period. Now, what if you had an extra sum of money that you had lying around, say $10,000? Does it make sense to pay off the homebuyers plan faster, or does it make sense to make the minimum payments and invest the rest in other vehicles like the TFSA or the RRSPs? It rarely makes sense to pay off the homebuyers plan early. There's no advantages to it. It's an interest-free loan. If it's an interest-free loan, it doesn't make sense to try and pay that off any faster. If you had that $10,000, put the minimum down, let's say it's $2,000, and then put the $8,000 into your RRSP or TFSA, and you'll get the tax benefits from there. By investing it into that repayment, there are no advantages. You don't get a tax break. It's not tax-free money. There are no advantages other than you have paid off your loan a little faster. That 0% loan. So generally, it makes sense to just make the minimum payments and pay it off over those 15 years. You do have another option though. So option 1 is to make the minimum payment. Option 2 could be that you don't pay your HBP back. Why would it make sense to not pay the HBP back? Any portion of the minimum payment that you don't pay back counts as taxable income. So let's say, again, you had a minimum payment of $2,000. If you do not make that payment of $2,000, well, that $2,000 just counts as taxable income and gets taxed at your marginal rate. So for me, I'm in the 30.5% tax bracket. So that $2,000, if I didn't pay it into my HBP, it would get added to my income and I would get taxed $610. 30.5% of $2,000 is $610. So I would owe $610 at tax time. Now, what happens if I got laid off, or I was in a low income year, or if I was self-employed and I had very little income one year and I drop into a very low income tax bracket? Well, maybe at that point, it doesn't make sense to even make a payment. Maybe you just suck up the cost of the tax that year and then start paying back the HBP when you're in a higher tax bracket again. And so how do you pay it back? Well, you basically just make an RRSP contribution like you normally do. And when you're filing your taxes, so you can see here, this is a program called uFile. I just clicked on the side here to the RRSP contributions. And at the bottom, you can designate a certain portion of that or all of it to the HBP here. And if you just click on that, you can just state you want to put $2,000 down, whatever you happen to want to put into the HBP. So should you use the homebuyers plan? I mean, that's up to you. Let's talk about some pros and cons to using it. Pros, I guess the big one would be it is an interest-free, tax-free loan. I mean, you're not going to beat those interest rates anywhere, right? 0% interest on this loan. You're also just borrowing from yourself, right? The only consequences for not making those minimum payments is that you have to pay taxes on the withdrawal for that 1 year that you didn't make the payment or the full payment. Whatever you do take from your RRSPs for the homebuyer plan, that can be used to lower your mortgage rates. It can be used to buy a bigger house if that's what you want. Maybe you withdraw enough that you can now put down 20% on your mortgage and now you don't have to pay the CMHC insurance. So you can save yourself a whole bunch of money by not paying the CMHC insurance and having lower mortgage payments. The repayment plan is pretty flexible. I mean, as long as you pay that minimum at some point through the year, you're going to be okay. If your minimum payment is $1,200 for the year, you could put down a lump sum of $1,200. You could make a monthly contribution of $100 or whatever you want. So it's a pretty flexible repayment plan. And another big one that I haven't mentioned yet is that you can combine it with the FHSA. So if you had $40,000 in your FHSA and you used up to $60,000 from your RRSPs, that could be up to $100,000 as an individual to put down onto a house. And some reasons not to use it. The big one is the opportunity cost. I mean, if you had that $60,000 sitting in your RRSP growing at an average rate of about 7% over the 17 years, so 2 years for the grace plus the 15-year repayment, that $60,000 grows to $190,000. If you do make the minimum repayments, then you have about $90,000 at 7%. So there's a $100,000 difference in your RRSP retirement plan by the end of those 17 years. Those costs can be offset with lower mortgage payments and possibly not paying the CMHC insurance. So again, you crunch some numbers, see if it makes sense. So I hope this video has shown you how to use the HBP, what it is, and maybe it is right for you, maybe it's not right for you. Crunch those numbers and see. If you've enjoyed this video and would like to stay informed of some of my other ones, please subscribe below and have a wonderful day.